statistical, mathematical fact
never has been down.
has broken every single record. There is no asset that has come close.
It's the only thing in the industry that was not touched, that was not hacked, and it never fails doing what it promised in 2009. It's never
What's
failed.
the best performing asset the world has ever seen? And you'll find out that it's Bitcoin.
Good afternoon, traders. Good evening for some, and maybe even good morning for some. I know we draw an international audience here, but wherever you are in the world, welcome. Welcome to another live space with Oliver Velez. Of course, my name is Oliver Velez. And what I attempt to accomplish in all the work that I do here on Twitter or X or whatever you want to call it, and all the talks that I do, the live spaces, I'm attempting to be your Bitcoiner for life. That's it. That's my goal, to be your Bitcoiner for life, to be that lone voice in the wilderness, for lack of a better phrase, to be that voice of reason, to be that glimmer of light or hope when things get a little dark, fuzzy, confusing. I want to be that voice that cuts through, captures, and clarifies the essence of what Bitcoin is, what it means for us in our lives and in our futures. And I don't ever want that message to be lost. Something quite magical happened to me, life-changing in a sense, happened to me sometime in late 2020, I would say. And I can't say that while it appeared as though this epiphany of mine, this Peter moment of being knocked off the horse at Damascus, for those of you who have a Christian background, you'll understand that metaphor. I can't say that while it appears as though that flash, that change, that instant life-changing thing occurred in a moment, it appeared as though it occurred in a moment, I believe that it was actually underneath formulating and percolating for quite some time. But I want all of you to experience the same thing that I experienced. I want you to have that same epiphany if you haven't already. I want you to see how fortunate we are to be living today, in today's era, today's time. And I want you to really try. I want you to be able to wrap your mind around the enormity of the importance of this time and the enormity of the importance of being alive at this time, a time where the human race has the ability to begin a new era with something very special, which I call Bitcoin. And, you know, I've been accused of speaking of it in almost religious-like terms, and it's just because I've had this epiphany. It's because Bitcoin has struck me at the core. It's because Bitcoin has sort of lifted the curtain on the matrix, if you will. It's opened my eyes to this system that I had become somewhat of a master at manipulating and working. It opened my eyes to see how corrupt that system was and how there was an escape from that. And so when I say I want to be your Bitcoiner for life, I want to be your Bitcoiner that helps you, if you haven't already arrived at that point, understand that this is more than buying something for $1 and selling it for $2, that Bitcoin is freedom, that Bitcoin is salvation, that Bitcoin is hope. And I'm hoping the way it made me realize that I was a comfortable slave on a plantation, if you will, that had decorated fences and beautifully painted walls. And because the fences were so beautifully adorned and the walls were so artfully painted, I did not realize that I was still a slave. I was still on a plantation. I was still coerced to work for the creation of another man. I was still forced, I was not given a choice, what money to work for. That because I was born on a specific piece of land, I was compelled to work for a piece of paper, a coupon that was created by another man. I was forced to work for a coupon that was in the control of someone else. I was forced to give my life, my time, my effort. I was forced to dedicate my life to working for a slip of paper that was created by other men who had control of the coupon's number, they had control of the coupon's supply, and could make it go up and down at will. And Bitcoin came into my life and made me realize how wrong that is, and how that is the most artful form of slavery, a financial slavery. And so, once again, when I say I want to be your Bitcoiner for life, I want to be right here in your faces, in your ears. I want to infiltrate your living rooms. I'll leave the bedroom for you guys. But I want to infiltrate every corner of your life with this message until it oozes from every pore, every orifice in your body. I think it's that important. I decided that I would do what I hope eventually all of you do if you haven't done so already. I decided to dedicate all of my talents to Bitcoin and spreading the gospel of Bitcoin. And I believe that in my heart that every single person should get to the place where they begin to use whatever they are and use whatever they do in life for the benefit of Bitcoin. And so the two things that I developed some talent at was trading, financial markets, and speaking about financial freedom. And I decided that I would take those two talents, my trading talent and my ability to communicate. I would take those two talents and I would dedicate them, I would give them, I would offer them up entirely to spread the gospel of Bitcoin. I'm hoping one day that if you haven't reached that point, that will be your point. That if you sing, and that is your profession, that you sing for Bitcoin. That if you are an entrepreneur and you are talented at business startups, that you become an entrepreneur for Bitcoin. That if you are great at marketing and that is your skill, that is what you do better than 85% of the people on planet Earth, then you market for Bitcoin. If you are an amazing salesperson, you sell for Bitcoin. Whatever you are, whatever you do, whatever your talent is, I believe that if you give that to Bitcoin, that the benefits back to you will be multiplied many times over. Bank of America has told us that they have conducted an extensive study on the networking effects of Bitcoin. And their study revealed a multiplier, which is to say that 1 and 1 for Bitcoin don't equal 2. That in this sense, Bitcoin breaks the laws of mathematics. That it has a 118 multiplier. So in essence, what they discovered through their study is that not only is 1 plus 1 not 2 for Bitcoin, 1 plus 1 equals 118 for Bitcoin. And it's mind-boggling if you step back for a moment and allow this to be digested into your system, into your psyche. That for every effort toward Bitcoin, you get back 118. For every dollar that goes into the network, it's $118 of value added. That you push forward and you receive back 118 times the force. Now, if this is true, and I believe it to be true, it's powerful. And so today I'm very glad that I made that choice in late 2020 to dedicate all that I do for Bitcoin. So yes, today I trade for Bitcoin and I speak for Bitcoin. Those are the only two things that I can do with any degree of, I don't know, proficiency, for lack of a better word. And I give those entirely to Bitcoin today and forevermore, for that matter. I'm hoping you join me on that journey. All right, traders, listen, I wanted to talk about something really fascinating because I wanted to talk about price targets. And this came up largely because I wrote a post or did a tweet yesterday on, and I mapped out for you what I call my price framework. Okay, a price model, if you will. And I mentioned in that post that I have come to the point of I've developed a real distaste for price predictions. I don't like them today. This was not always the case. You see, when I made my first foray into Bitcoin in March of 2020, I had over 9,000 traders waiting for me to strike. So I prepared these traders from December of 2019, and I told them when the time to strike comes, I will let you know. And so on March 12th and 13th to be exact, those 2 days were our striking days. Bitcoin gave us a wonderful opportunity and the market collapsed during C19. I never thought I'd be able to get Bitcoin once again below 4,000. That didn't bother me. But when I saw that opportunity during that crash, we made our first foray and I brought 9,000 traders with me. We bought Bitcoin in that flurry to the downside as low as $3,800 a coin. At this particular point in March of 2020, I was not what was called a Bitcoin maximalist. All right. Because I did the same thing with Ethereum on those 2 days. I got Ethereum as below $100. So I wasn't a Bitcoin maxi at that particular point. I did not know what this item was. I approached it like any other trade. I approached it like any other item to earn dollars. Bitcoin was nothing more at this particular point than another vehicle to make me richer in US dollar terms. And so at this particular point, my traders wanted my view on what the potential upside was. Now, I had been studying or looking at and studying and investigating Bitcoin from a technical point of view over the entire bear market move to the downside. This is important. This backdrop is very important. So please bear with me. And so I wasn't delving into anything beyond what its price movements had done in prior cycles. And so based on prior cycles, I had come up with a price target through this next cycle of 40,000. And so my traders were shocked. They were like, Oliver's gone mad. Hoo-hoo, he's loony. He's calling for Bitcoin. We just bought at 3,800 and Oliver's calling for a $40,000 Bitcoin. And I did. And all of this is public, guys. If anyone were to just do a tiny bit of research, you'd find all of these posts publicly. All right. And so a lot of people thought I was crazy with the $40,000 price target, but I was providing it. Now, let me say that at this particular point, or let me reiterate at this particular point, I was into price predictions because I was approaching this more as an intermediate term play, a trade, and I was intending to buy it and sell it at certain points, just like all other bozo traders do, right? Anyway, today, I don't like doing that. Today, I don't like coming up with a price, even though I'm pressured almost every single day to do so. You see, I know where it comes from. If you've known me for any particular period of time, you know that I come up with price predictions. I, I'm adult enough to know that price predictions are basically a form of tea leaf reading. You can't really know the future, but I've developed this a pretty decent skill at probabilities. And so using my skill to come up with appropriate probabilities, I can usually get a price prediction area zone, if you will, more right than wrong. And I've developed that skill over 37 years, 38 years to be exact today. Today's my trading birthday, by the way. December 6th, 1986 was my first day as a professional trader on Wall Street. So my team sort of celebrates my birthday today. That's why it's on my mind. Anyway, okay. So happy birthday to me. So, I'm pretty good at coming up with the probable nature, the probability of something moving this far. And all I'm doing is using the past. And a lot of people say, well, okay, the past may not repeat itself, but it often does. And it's the only thing we have. So when someone always tells me, Oliver, but the past is no guarantee of the future, I know that. But if you have seen Tuesday follow Monday, for 15 times in a row, are you going to bet a different way? When Monday comes around, are you going to bet that, no, I've seen Tuesday follow Monday 15 times in a row. I think this time I'm going to bet that Thursday's going to follow Monday. That's idiotic, right? So if you have found something that has repeated itself in a provable way every single time this way, it is asinine to think that you should play a different way. You do that until it breaks, right? Well, that's all I do. I look at the past, and if it's repeated itself, I don't fancifully create a theory for something else happening. That's what novices do. Oliver, I know that Tuesday has followed Monday every single time. You've shown that to me, but what if, that's what I get from novices. I show them something that happens every single time. It's happened every single time without fail. And then the first thing they come up with is but. And I tell them, get your butt out of the way. What are you butting for? Why are you creating a scenario in your mind that has never happened before? So this is what I do. I take repeatable things and I project them for the future. And that's what gives me the foundation of my probability analysis, right? So the point is that I want to make is that some people got my post yesterday when I said that I don't like price predictions, and they laughed and said, well, you're giving a price prediction, but you don't like price predictions. And I was like, no, I'm giving a price framework. I am providing a price model. Now, a price model is very different from a price prediction. And I hope by the end of our talk, you understand that. Because the model that I gave you yesterday in that tweet, in that post, where I said my price model based on the past, right? My price model says that the bear case is 100. I made a typo there. My bear case is $170,000 for Bitcoin. That's the bear case, right? By the end of 2025. And then there's the bear bull case. Then there's the bull case, which is 3 something. And then there's the super bull case, which is close to 500,000, which is a little bit less than 500,000. So I made that post. If you haven't seen that, you should go read that right now, because that's the basis of our talk here today in reality. And if someone would be kind enough to kind of post it in this live talk, that would even be more helpful. I appreciate that. And so understand that that's a model. My price prediction is very different from that price model. So that price model where I gave you 3 levels in that tweet, that's a price model. You don't even want to know my price prediction if I were forced to give it, which I'm not. But understand that these 3 price points that I provided, they're a price model based on the past. It has nothing to do with my prediction, my personal prediction. All right. So that's one thing I wanted to make clear. All right. And I think that clarity is important before we sort of go on here in this talk. And I do appreciate you all being here, guys. I see I guess about 15, 20 people here, and I appreciate that. Appreciate your time in that respect here. Let me see if I go back here. So what I want to do is I'm going to pull this up here. I want to see some of your comments here. Give me just a moment here. So we've covered the difference between a price model and price framework and a price prediction. Now, some might ask, well, Oliver, why is it that you don't like price predictions today and you gave them before? And it's because what Bitcoin has taught me is that I was mired in fiat oriented thinking. So I was using Bitcoin to get more fiat dollars. It was just a means to an end. It was something I stepped on for more dollars. What mattered was just more dollars, more fiat. And that's a fiat mindset. And so over time, understanding more and more of what Bitcoin is and how stupid that is, that I realized that I should be trading not for dollars, I should be trading for more Bitcoin. That why would I be trading for the weaker item when Bitcoin is the stronger item? All right. Bitcoin is the opposite of the dollar. So if the dollar's purchasing power goes down, Bitcoin's price must go up. It's designed to be the opposite of the dollar's purchasing power. So if the dollar's purchasing power has been declining for the past 113 years, it means that Bitcoin is guaranteed to go up. If the dollar's purchasing power will always decline, that's a guarantee that Bitcoin's price is or value is going to always go up. It's designed to be the opposite of the dollar's purchasing power. So how is its future not higher? Because we know that all fiat currencies can only go in one direction, down. So when people ask me, Oliver, how do you know that it's going to continue to go up? I'm like, you don't understand the nature of Bitcoin yet. If you have that question, it's designed to be the mirror opposite of fiat purchasing power. And fiat purchasing power can only go in one direction. It can only go down. So if fiat purchasing power can only go down, Bitcoin's price can only go up. It's simple. And whenever someone asks me, but how do you know? I know they don't understand Bitcoin yet. You don't even know what it is. It's the mirror image of fiat purchasing power. And that's the simplest term to understand Bitcoin. And if you look at the purchasing power of the US dollar since the Federal Reserve came into existence in 1913, it's straight line down. And it will always go down. There is this false notion that the dollar goes up in value. It can't go up in value. Every time you print a new dollar, it drops in value. How can it go up? Printing will never stop. Printing will never stop. My mom used to say, Oliver, never say never. I'm sorry, Mom. In this case, never will the dollar stop being printed. Never, ever, ever. Not in your lifetime, not in the lifetimes of your children, not in their children, not in eternity. Do you understand? And so because there is no bottom for the dollar, there is no top for Bitcoin. You have to understand that. And when you understand that you just stack and chill because it's guaranteed to go up, because the purchasing power of the dollar is guaranteed to go down. It's designed to be the mirror opposite. And you know what? That view of Bitcoin, that definition cuts through everything, all the bullshit, and gives you the essence for what it is. But of course, in the beginning, I didn't know what it was. So I was stuck in this fiat mindset. I need more dollars. And so I was coming up with price targets. Now, the first one I came up with $40,000. This is in March of 2020. And a lot of my traders thought I was crazy. And what my traders also understand and know, and I teach them all the time, is that you can have this price target, which we had, but it's the manner in which the price target is being approached is very important, because if it's gradually getting to your price target of 40,000, that's one thing. But if it's violently moving with a momentum that makes you want to say, oh my God, then you have to up the target. See, momentum matters. Speed, velocity, and momentum matters. If your item is reaching, so if Bitcoin was reaching 40,000 as if it was on its last leg and out of breath, about to collapse, but it's going to get to 40,000 and it just wants to get past the finish line. If it was approaching 40,000 like that, you'd keep it to 40,000. But if it was reaching 40,000 like it was just freaking warming up, you got to up the target. And so I upped the target from 40,000 to 105. So I upped the target from 40,000 to 105,000 because of the velocity and the power with which Bitcoin actually zoomed up into that area. Not zoomed to 40,000. I upped it at the end of 2022. At the end of 2020, because the way it had approached 30,000, and I believe we closed slightly above 28,000, if my memory serves me correctly, at the end of 2020. And I'm like, oh my God. I had no idea that I had an idea that based on the past we'd get to 40,000, but it's almost at 30,000 and there's a year left in my target. I'm like, I gotta up this. This is ridiculous. It's not gonna take a year for Bitcoin to move 10,000 points more, $10,000 more. So I upped it. I did a little bit more study. Technically, we're talking about not study into the essence of Bitcoin. Did a little bit of more technical study, and boom, I came up with the price target of 105. And then everybody thought I was crazy. And so the people who thought I was crazy at 40,000 really thought I was nuts at 105. But what they didn't understand is that I'd put the work in based on history. I'd put the work in. I'd studied every single cycle. I wasn't there, but I don't trade anything that I don't know the history of. I spend before my traders know this, before I even place a single dollar of a bet on anything, I will have to look at it, watch it, and study it for 6 months. It's not getting play from me until I know almost every single idiosyncrasy about it. I want to know every one of its habits. I want to know what time the item I'm about to trade has coffee in the morning. I want to know how many times a day it eats. I want to know its macros. I want to know how many hours on per day it sleeps. I'm using these as, in a satirical form to let you know that I just need to know the item from a technical perspective intimately before I risk a single dollar on it. And so what these people didn't understand when I came up with this $105 price adjustment, that it wasn't out of thin air. I didn't pull it out of my ass. I did study on this and I was right. Oh, yes. My target was right. Now, I know many of you might be saying, well, Oliver just doesn't ever want to admit that he was wrong, because Bitcoin certainly didn't get to 105. It didn't get to 105, but I was still right. Yes, you want to call that ego? Be my guest. But I'm going to explain to you why I was right, even though it never happened. You see, a black swan event occurred that really interrupted Bitcoin's flow. It was going to 105, guys. In 2021, it was going to 105 and beyond, in my opinion. And something in the middle of that run occurred that knocked it back. Now, I want you to think of like a boxing match where there's a boxer that's dominating, but someone gets the opponent that is losing gets a lucky blow and knocks the clearly dominant boxer down. Now he's not out. The boxer's not out, but he's definitely down. And like, whoa, what the heck was that? And Bitcoin experienced this not. Bitcoin experienced this blow, and it was delivered by a country, a nation state that actually housed, for lack of a better word, nearly 60% of the entire Bitcoin network's hash rate. China. China pulled the plug in May of 2021 on Bitcoin mining. And that they demanded in May of 2021 that every single Bitcoin miner in the country had to unplug their Bitcoin miners. And they did, for fear of going to jail for life. Now, China made this move because they did not want an alternative money source, an alternative monetary unit like Bitcoin competing against their plans to release their CBDC, their central bank digital currency. And so they felt that the best way to give 100% focus to their bullshit, right, was to make the miners unplug. And they did. And what this did was knock Bitcoin's life, if you will, back. It knocked it back. It hurt it. The hash rate took a major dive. Now, remember, China at one point had almost 90% of Bitcoin's hash rate. It had been dwindling down cycle after cycle, but we were still around 60% in May of 2021 when they forced all of their Bitcoin miners to unplug and disperse. Now, this turned out to be positive in the end, but Bitcoin's hash rate took a big drop. And as I mentioned in a post earlier, a couple of days ago, I have always believed that price follows hash rate. When the hash rate instantly dropped by all of those miners unplugging, the price topped out at 64,000 at the time and started this incredibly persistent decline following hash rate. That decline in Bitcoin dropped from 64 and it bottomed out around 28 and change, if my memory serves me correctly. I believe it is 28. Now let's call it 28. 64 to 28. Now, listen to me carefully, because this is the foundation upon which I'm building my entire talk. I'm going to prove to you that I was right. So listen carefully. Bitcoin had to turn from that bottom of 28, and it roared. I am telling you, it came back like a bat out of hell. The hash rate came back like a bat out of hell. And it rallied from 28 to 30 to 35 to 40 to 45, 50. It came all the way back. And in November of 2022, it moved to new highs, reaching slightly more than 69,000. Wow. Wow. Think of a boxer getting knocked down and coming back for the knockout. You say, okay, you got one lucky punch in. Now I'm going to really show you who's the dominant player here. And Bitcoin did. But you see, Bitcoiners, traders, followers, supporters, haters, here's the rub. Bitcoin had to double dip. This black swan event, China causing the Bitcoin miners to unplug and the hash rate taking the hit, which led to the price being hit. This had never happened before, thus a black swan. And so Bitcoin had to double run. It had already run from 28 to 64, but it had to do it all over again. That black swan event made it have to go all the way back to 28 and use the energy that should have been used to go from 64 onward. It had to go back to 28 and start again. And so I want you to imagine a marathon runner who's training to get to 105. All right? 105. This marathon is for 105 miles. And this marathon runner is a champion marathon runner. He wins most marathons, and he's training for this 105 marathon race. And he is now ready for the race. He takes off. He's winning by a long shot. He goes past the 10-mile mark, way ahead of everybody, 20-mile mark, 30-mile mark, 40-mile mark. He gets all the way to the 60-mile mark, goes a little bit further after the 60-mile mark, and the organizers of the marathon say, wait a minute, we had to stop you. He says, wait a minute, I'm in first place. Can you talk to me after the race? No, stop running. And the marathon runner stops running. He says, listen, we're sorry. We'll explain later, but you have to go all the way back to mile 28. We know you're at mile 64, but you got to go all the way back to mile 28. So we need you to run back, all right, and then start the race from there. And so the marathon runner said, that's unfair. I'm so far in front of everyone. I'm in front of the NASDAQ. I'm in front of the Dow. I'm in front of bonds. I'm in front of the S&P 500. I'm in front of real estate. I'm in front of gold. I'm in front of everything on planet Earth. And you need me to go back to mile 28 to reduce my gain? That's not fair. Sorry, you got to do it. So the marathon runner, Bitcoin goes all the way back to 28. Now it has to continue the marathon race from 28 again. It has to pass the same miles that it already passed. This marathon runner, when it comes all the way back to 64, where they told the marathon runner to go back, that marathon runner, the second time, is not the same marathon runner as he was the first time. Because he had to double run the same miles, he's tireder. He's more tired. He's more fatigued. He's more worn out. Because that effort from 28 to 64 again should have been on top of 64, put the number on top of it. From 28 to 64, if you put the 28 to 64, if you place that run on top of 64, guess what number you get? 105. Yes, yes, yes. I was right. I was right. Do the calculation. Do the calculation. Let's do it. Let me do it in your faces right now. Let me do it in your faces right now. So we take 64, right? 64 minus 28 gives you 36. If you put 36 on top of the 64,000 where it topped out at, right? You get like around 100, right? Is that what you get? That's right. OMG. Plus 64. Boom, you get 100. My target was 105. In fact, to be honest with you, it was 105 to 108 because I always give a range. And the target was really 100, but what Bitcoin has a history of doing is overshooting its targets by a bit. So if I have a target of 100, I'll put slightly above. If I have a target of 60, I'll put slightly above. And so oftentimes it'll overshoot round numbers like that. And so I know some of you might be saying, Oliver, you're just making excuses, dude. It topped out at 69. You lost your price target. Stop making excuses. I get it. I understand it. But no, I'm not accepting that. I was right and I'm sticking to it. The reason why I believe that I'm right is because it was impossible to predict a China mining ban. If you had given me that, I would not have had a target. of 100, 105. You understand? So that black swan event, you can't tell me that if that didn't happen, that it would be the same 69 top out. You can't tell me that. You understand? This is a major blow. I want you to imagine that every miner is the power, provides the power, security, and support for the network. Well, if you eliminate 60% of your support, how how are you the same? You're not the same. You can't tell me that if all of those miners, all of that support, all of that power stayed plugged in throughout, didn't have to unplug, that it would have been the same scenario. Bullshit. I was right and I'm sticking to it. All right. And so I I wanted to go over that scenario largely part to explain and to clarify what a price model is versus a price prediction. And while I believe that price models help us, price predictions are it's like if you want to have fun with them, fine, but they have very little value, to be honest with you. A price model has much more of a value, a framework. All right. So when you have a price framework that says, for instance, like mine that I mapped out for you, if you have a price framework that says that the bear case is 170, because I made a typo there. I put 155. I did that wrong. That the bear bull case is 170. Then why the heck are you taking profits now if you're a profit taker? With a price model where the bear case is 170, you're an idiot. So that's where a price model can come from. A price model, that's where a price model can have benefits if you're a seller of Bitcoin. And I encourage you not to be. But let's say you like to place some hedges when you think Bitcoin gets ahead of itself, where you're not going to start placing insurance on your Bitcoin position. You're not going to start taking puts on MicroStrategy or the miners or whatever, or that you're not going to start shorting the Bitcoin ETF while you keep your Bitcoin. You're not going to do those type of hedging strategies at 45,000 when your bear case for Bitcoin is 170. So the price models help you with your overall strategy. Price predictions are for crypto bros, like the many who were predicting the price of Bitcoin to drop to 3,500 and 8,000, 9,000 and 12,000. Those bozos, they play that price prediction game. I no longer play that game. But I will give you my price model, which I did yesterday. And so I wanted to go over this largely to clarify the difference between having a price model, which all professional market players have, and having a price prediction, which you can just pull out of a freaking hat, right? All right. And my price model is based on history, as anyone knows who's read that price model there. I'm trying to see if there's anything else I wanted to cover here. Was there anything else? Let me just see. No, I think that was it for the most part. I think that was it. So, I hope that little tiny history of me coming into the Bitcoin space in March and bringing, 9,000 plus traders with me, many of whom actually, guys, did not hold on like I did. But quite a few did. So I'll even give you numbers with that. So out of 9,000 people who followed me into the Bitcoin play, we went from 9,000 all the way down to about 1,800, 15 to 1,800 that literally held on through everything just like I did. That's a big drop. It's a huge drop. But yeah. All right. So let me just see if I have some comments from you. Um, Lisa Hoddle says, happy birthday. Happy trading birthday. Thank you, Lisa. I appreciate that. Guys, this is something I never used to make a big deal of, but my teams, I have a variety of teams that work in different divisions of my trading operation, and they make a big deal out of this. So I even forgot until I just saw what they were doing on this my trading birthday here. The young gentleman, that's his name, he's asking, Oliver, at the end of your session, please comment on Jamie Dimon saying if he were in charge, he would shut Bitcoin down. And the young gentleman is saying, this is from a firm that has been fined buku bucks, like 20 billion for misbehaving. Thanks. All right. Well, there's Jamie Dimon, of course, has a long history of despising Bitcoin for a variety of reasons. Number one, Bitcoin is your own. When you become a Bitcoiner, you bank yourself, and so it is quite natural that the banking sector as a whole um, is going to be. It's logical that the banking sector would be its number one adversary, that its number one enemy, because Bitcoin has come into existence to give us the power to bank ourselves, not to rely on other men, the majority of whom are white men in three-piece suits in back rooms smoking cigars and counting their billions of dollars, as they manipulate the supply of the money. The banks are the agents of the powers that be that manipulate the supply of the money. And so it's through fractional banking, it's through the fractional banking, um, the fractional reserve banking method a, that a large portion of money debasement, the printing of money, occurs. And we throw this term around very loosely, but it's important sometimes to always go to the essence of how evil printing money is. Because, a lot of newbies, that's fine to be a newbie. I was a newbie once. A lot of people who don't have an economic or finance background may not understand the, the importance of printing money and what it does, the destruction that it does. It's actually theft. Because in the way I normally explain this, and I'll get to the answer, I know I'm doing a circuitous route here to your answer, but I haven't forgotten. The the metaphor I was used, the example I was used is, I used to be into baseball. My father was a minor league baseball player. And so I used to be into baseball. And I grew up in a baseball family as well, right? So anyway, I collected baseball cards. And, I understood from an early age scarcity. So this card is, a Babe Ruth card is very scarce today. Wasn't scarce necessarily when he was playing back in the 1920s, but it's scarce today. And because of that scarcity, it holds a very high value. Now, let's take the example of, there's only four. I'm going to use his name. This is not the true numbers, but it's an example. There's only four Babe Ruth baseball cards in the world today. And because there's only four, these things retain a tremendous amount of value. And let's say each card is worth $25,000 a piece. So there's only four cards in the world, four paper cards in the world, and each one is worth $25,000 a piece, which means that the entire pot of Babe Ruth cards is valued, the entire industry of Babe Ruth cards, the entire pot, if you will, is 100,000. 4 times 25, 100,000. And so It maintains this value at $25,000 a piece, $100,000 for the whole. But the baseball card company, who's still in existence today, decides to make another one, a commemorative Babe Ruth card that looks identical to the original one. And so they instantly sell this one commemorative card to someone for the same price, $25,000. They get the same $25,000 for the new card, but every other existing card drops in value. What does it drop? What do all the other cards drop in value by? They drop in value by 5,000 or more to accommodate the new entrant to the pot. So the pot will tend to maintain a $100,000 value, but now there's five. So now each card is worth $20,000. The card company printed a new card, Babe Ruth card, out of thin air by stealing value from all of the other existing card owners. Now every card, they lost, each card member or each card owner lost $5,000 because the card company printed another one. And if they print another one, it'll go down from 20,000 to 18. If they print another one, it'll go down from 18 to 15,000 a card. And they print another one. And so printing is the theft of your value. You worked for that Babe Ruth card. You paid $25,000 for your card. You had to bust your ass to get the Babe Ruth card, and all they have to do is print it, get the same price, and that price, the value that they get, comes from me, comes from my work, comes from my labor, comes from my investment, comes from me busting my ass. You get it for free just because you've got the printer. And this is how printing dollars every second of your life is stealing from you. This is how it's stealing your very essence, stealing your effort, stealing your time, stealing your talent. You are forced to work for it, and it's being stolen from you at the same time by the same people. The same people that force you to work for the Babe Ruth card, they're stealing from your Babe Ruth card savings. This is what Bitcoin has come to protect us against. Who are the agents of this money printing scheme, this money printing scam, this Babe Ruth card printing scam? Who's the agents? The banks. Of course, the banks don't like Bitcoin. Of course, the biggest bank, led by the biggest bozo, Jamie Dimon, is going to be the biggest hater. They got the biggest. They got the biggest to lose. They're the biggest. So it is no surprise that Jamie Dimon is an enemy of Bitcoin. It makes his whole shit irrelevant. Bitcoin does. And not only that, what a lot of people don't understand is that Jamie Dimon's JP Morgan is an original partner investor in Ethereum. That's right. That discombobulated contraption of a shitcoin called Ethereum. Now, where are their incentives? As an original partner owner in Ethereum, do you want Bitcoin to win? No. Do you want the item that basically over time makes all of what you do, everything that you have your identity tied to, obsolete? Because Bitcoin gives everyone in the world the ability to bank themselves without your theft, without you stealing from me. It is no surprise that this bozo is an enemy of Bitcoin. He owns Ethereum. His entity owns Ethereum, was an original investor in Ethereum, and Bitcoin makes his whole life and everything he stands for, everything that makes him Jamie Dimon, Bitcoin is against. So of course, And you can't get more criminal than JP Morgan, right? Well, maybe you can, but they're right up there in the top three financial crimes unit. Financial, they've committed more financial crimes. They're in the top three of all financial crimes committed in the world. It's crazy. But they have a privilege that in a fiat world, banks have a privilege that no one else has. They have the ability to print, and they have the ability to commit a crime without going to jail. Bankers don't go to jail. They just get fined. And they get fined a very small piece of whatever they took from the scam or scheme they were running. You see, when the world almost collapsed in 2008, it was because of the greed of the bankers. They raped the system. They raped you and me. They raped the entire world. And they got so greedy, they raped it so hard that the thing they were raping was near death, a violent rape. And to save the system, what did the powers that be? The powers that be went to the very people that were the cause of the raping. They went to the rapist and they paid them to stay to help salvage their rape. They gave them exorbitant bonuses because what the rapers, the bankers said was that we're out. We already made our trillions of dollars. We're gone. And if you want us to stay to try to correct what we did, you got to pay us. And so the raper got paid to solve his own rape. Now, don't get me started on this. Do you understand? You do not want me going down this path. You will see a side of me that is not very pretty. I am a Bitcoiner today because of this bullshit. I lived this bullshit. This bullshit was my life for 38 years. I know it better than most of you. And that is why I am more disgusted than most of you. And that is why I'm probably more of a Bitcoin maximalist than most of you. I've been mired in this mud and this filth for a long time. And I'm very glad that I have an escape. I'm very glad Bitcoin is here. I'm very glad I was given the right or the good fortune by Providence to just see it for what it is, to understand it, to embrace it. Because there's so many people, they're right here on my feed, that are disrespecting this. They're disrespecting their freedom by not even looking. They're disrespecting the Savior by not even taking a pause. And they're going to pay for it. And it's not going to be pretty. All right, young gentlemen, I hope I know that was a long answer, but I told you, don't do it. Don't get me started. Don't get me started. Pablo Perez is asking, hi, Oliver, what do you believe would happen to Bitcoin's price if a new, cheaper source of energy would emerge? It would only make Bitcoin more secure, more powerful, more invincible, right? Because you understand that the cheaper the energy, the more computational power is going to be contributed to the network, because if energy got cheaper, wouldn't you start mining, Pablo? I mean, the only reason why you're not mining today is because it's probably too prohibitive in cost, because energy prices are too high in the most populated areas on planet Earth. In order for you to get really inexpensive energy, you'd have to go to where it's not very densely populated. So most of you now understand why I'm in Latin America, right? My mining operation basically mines at zero cost. So my point is that you would start mining if your energy costs got below the cost of mining a Bitcoin. I would mine more. Most of you listening would start joining the mining pools as well. And so cheaper energy is only going to drive Bitcoin mining, only going to drive, and more Bitcoin mining means more hash power added to the network. More hash power means more security, more strength, more invincibility, and higher prices. So that's what I would expect to happen to Bitcoin's price as energy prices plummet. I hope that answers that question. Next. Next. Let's see here. Anything else? You guys don't ask questions, though. All right, here we go. I know you will share, MS3AD said, I know you will share so much information and wisdom on this live space. Unfortunately, I may not be able to attend. Can you please record it? Guys, all these spaces that I do are recorded. You can listen to them here. They're also put on my Bitcoin podcast called Bitcoin Unleashed. Look that up, please. Bitcoin Unleashed, Spotify, Fountain app, Google, Apple. It's all over. All right. But I always tell you that I like the Fountain app because you can earn free Satoshis. How cool is that just by listening? Really? Guys, there used to be this thing called the Bitcoin faucet. Gavin created a Bitcoin faucet, a digital Bitcoin faucet, all the way back, I believe, in 2011, 12. And it was to promote Bitcoin. And so it was a web page where you just went to the web page, you entered an email address, and you solved a caption, where you have to say, is this a little r or a big R? Is this a little L or a big L? Like that. So you do a CAPTCHA, you solve that, and boom, 50 Bitcoin was yours for free. And so when Gavin realized that what people were doing is they were putting in 50 different email addresses and getting 50 free Bitcoin for every email address they did, he put some type of time limit on it and then started to shrink the amount down from 50 as Bitcoin's price started to gain some traction. So he did this faucet when Bitcoin was practically nothing, right? Well, Fountain, imagine no one's giving 50 Bitcoin away to you for free today, are they? No. How much is that? 50 times 43,000. That's crazy, right? All right. So think of today where it's the same thing. Gavin initially had a hard time getting people to even go to the website to receive. They felt it was too much of a bother. Like, I got to do what? I got to get a wallet? Like, what do I have to do to receive this? I'm not doing that. 50 free Bitcoin. Look it up. Look up Bitcoin faucet. Gavin. I think I'm saying his name right. Anyway, so right now you've got an app, Fountain app. You're getting free Satoshis for listening to my talks or anybody's talks for that matter. Do you realize that in the future how ridiculous that's going to be? You got free Satoshis the same way it's ridiculous for us to think you got 50 free Bitcoin just by going to a website. People are going to be like, you got 2 million Satoshis for listening to Oliver Velez? Really? So you got to take advantage of these things, guys. You got to have a little bit of vision. Remember, I told you I come up with probabilities based on the past. So if you go back to the past when people felt that 50 free Bitcoin was nothing, and now it's like, oh my God. Now, fast forward, you're now able to get free Satoshis. And one day in the future, people are going to think that's ridiculous. It's just projecting what has already happened into the future. And I've done this extraordinarily well for over 3 decades. And it's simple. I just take the past and throw it forward. All right. All right. So anyway, what else here? Nope. That's it. Now, guys, a lot of times I get these, oh, I think I'm in the wrong account here. I get these give me just a moment here, guys. I apologize, but I often get a lot of your responses after I close out, and I really just don't understand why. So winning is saying, I may have missed it, but what is your price prediction for this cycle? I will not give you my price prediction, winning, but I will give you a hint. Okay. So you have to listen to this again to understand why I don't give it. Right. And why I used to give price predictions, why I don't now, and I give you a price model instead. So my model has 3 price zones, right? 170. I made a mistake on the calculation in that post, so it's not 155. The bear price area is 170. The bull price area, let me go to it here. I can go to it. I'm going to get these numbers right for you here. And I know it's like 3 something. Give me a minute here. Wow. I tweet a lot, don't I? Well, damn. I didn't realize I tweet this much. I tweet a lot. The heck? I got so many of these things I can't even find it here. Oh, it's because it's my pinned tweet. That's why. Okay, got it. Let me just make sure I get these numbers right. So my bear case, that in that thing I posted, guys, I have the bear bull case is 155. I did that wrong. It's 170. The bull case is 310 and the Super Bowl case is 465. So this is just a price model. You got to understand that it is not a price prediction. My price prediction is not this model. You don't want to know my price prediction. I'm keeping it to myself, but I'm trying to give you a hint of where it might fall. You understand? And when I say this, guys, I am talking by the end of 2025. So this is the time frame that I'm thinking of. And some might consider these numbers quite crazy, but they're actually the furthest thing from crazy. Crazy, you want to see crazy, then I use what it did last cycle. Because if I lose what it did last cycle, or a cycle before that, then these numbers get really, really crazy. But all right. So anyway, what else here? So please listen to this though in its entirety if you can. I think that would be very helpful. Frederick Crone says, Oliver, thank you for doing these. Question. Could you please at some point elaborate on your thoughts about Bitcoin being used as pristine collateral in the future and how you imagine that would work? I think that's a very good question. I do think that that deserves a special space. So I'm going to give you broad strokes on Bitcoin and how it is becoming and will continue to become the most pristine form of collateral in the world. You see, the entire financial system operates based on collateral. Okay. And um, when you get it, especially when you get into the world of wealth, you don't really use cash. You use collateral to get other things. You use hard assets as collateral in most cases to get other hard assets or other things. All right. And so whenever you are using, so I want you to think about the difference here. When you place an asset as collateral, a hard asset, that is more pristine than putting up cash as a down payment, let's say, which is a form of collateral, right? So when you put up a hard asset, it's more pristine than cash. And I'm telling you that Bitcoin is going to become the most pristine form of collateral. Why? Because all other forms of collateral can be ruined. If I put up a house as collateral to get another house, to get a loan for another house, what if that house burns down? The person that gave the bank that gave me the loan doesn't want my house to burn down, but it could. What if it gets vandalized? What if there's some legal battle of ownership later in the future that claims that I'm not the rightful owner and I posted it as collateral to get another house? So there are always holes in every other form of collateral. It's not pristine. Okay. Um, there is always in every other form of collateral, there's third party risk. So what I mean by that is I post something valuable for collateral that I want back. I'm just posting it as collateral and they lose my collateral. I gave it to this person to hold as collateral so that I could purchase this, but they lost I paid back the loan. Now I want my collateral back and it's not there. Sound familiar? Celsius, Voyager, BlockFi, da, 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 right? Gemini. So the list goes on and on. So there's third party risk when you post, you give your collateral to a third party. What if they lose it? What if they steal it? What if you never get it back? So you could post collateral that's risk to the holder of the collateral, like the house burns down. You could post collateral, pay the loan off, and want your collateral back, and it's not there. You have to trust that it's there. Bitcoin eliminates this and many other things, becoming the most pristine form of collateral. Like no other collateral trades on the weekends, no other collateral is liquid as Bitcoin. Selling the home because I can't pay the loan back, and now the person that's holding my house as collateral doesn't really want to have to deal with selling it, but they have to. They take the home. They don't want to do that, but they have to. It's not liquid. So Bitcoin's the most liquid form of collateral. It trades on the weekend, 7 days a week, 24 hours a day. You can get in and out in an instant, and there's no third party risk. It's 100% verifiable by every person on earth. You can see where the Bitcoin is. You can prove where it is. You verify that it does exist. It can't be burnt. It doesn't get water damage. You don't need insurance on it. It doesn't need repairs. And it's available 24/7. Pure, liquid, pristine collateral. It can't be stolen. It's stored in the most secure network the world has ever had. And then when you time lock this, because that's where it becomes the most pristine of all. You see, when Bitcoin is time locked, and this is where it needs a dedicated session to time lock Bitcoin. When you time lock Bitcoin, Bitcoin can't be touched, not even by you. So if I could put a time lock on my Bitcoin and say, look, my daughter is graduating in the year 2026, She's graduating in June of 2026. I'm gifting her 1 Bitcoin. I'm giving it to her now. I'm giving it to, it's $43,000 a Bitcoin. I'm giving her this $43,000 gift, but it's time locked Bitcoin that actually will hit her wallet on January 1st, 2026. Now, between now and January 2026, not a single soul on this planet, not even you, can touch it. Now that's pristine. The safest Bitcoin in the world is time locked Bitcoin. Not even you can fuck it up. Not even you can lose it. You could send Bitcoin to yourself a year from now. You know, because I tell my traders this all the time. Like, if you feel, you know, you shouldn't be selling this, but if you feel like you need someone to force you not to sell it, time lock it. Time lock it to yourself. Send it to yourself in the future with a time lock on it. So it's your wallet that's going to receive it. You're sending it from your wallet to your wallet. You can send it to the same wallet. You got 1 Bitcoin sitting in this wallet. I'm going to send this one wallet to myself. Same wallet, same address, I should say, not wallet. I'm going to send it to the same address, but 1 year from now, or I'm going to, November of 2025, I'm going to lock it. I'm going to suspend it. I'm going to lock it until November 2025. And it's going to become accessible in my wallet in November 2025. No theft. No, not even if someone got your seed phrase, they couldn't take it. How crazy is that? Even if they hacked you, they couldn't take it. If they found everything, they couldn't take it. Locked Bitcoin is the most secure Bitcoin in the world. And as such, it is going to become the most pristine form of collateral the world has ever known. Every bank, every financial institution will use time locked Bitcoin. It's powerful. Powerful. So gentleman says, thank you, Brooklyn. Great content. He calls me Brooklyn because I was born in Brooklyn. All right. Rico is saying, could you expand on seed security, where to store your cold wallet seed, tricks in case it's discovered, etc. So again, this is really technical, and I don't really like to have these technical talks in a public forum. I usually do them with, my special group. We dedicate a day to things like this. But in general, I will say that it is my belief that multi-sig, a multi-sig wallet setup or security setup is better than a single sig. I get debates on this. Some people say, well, no, a single wallet with a passphrase is simpler and this and that. And I beg to differ. I believe that multi-sig wallet, a 2 of 3 wallet system where you need 2 keys to lock, is the best security system. It eliminates the single point of failure. And if you diversify the manufacturers of your wallet, it eliminates the possibility of a wallet manufacturer going rogue on you, putting a backdoor in the software, or what have you, hint, hint. So you have 3 wallets from 3 different manufacturers that are part of your 3 wallet setup. You need 2 of those 3 keys to access or unlock the Bitcoin. And so you make sure that each one of these wallets are jurisdictionally different. You want diversification in your location. So one hardware wallet is in one location Another one is in another location, and another one's in another location. And the further apart you can make them, the better. And you want to make sure that that in order to get to another location, you have to pass some form of security. So you have to pass a police station, or you have to take a train, or you have to take a plane, or you have to cross a bridge, or you want something in between your locations where you know that you'll be able to seek help in the middle of a location if something nasty like that were to happen. And so if you do this, you could have a safe deposit box and a bank in one location. You could have your house as one location, and you can have, your grandmother's, whatever, another bank's deposit box. You could do collaborative multi-sig with a company like Unchained Capital. You guys know that's whom I use. So that's the way you should do it. Now, it does mean that you have to take care of, instead of one seed phrase, you've got to take care of at least two seed phrases. You got to take care of 5 items, basically. You got to take care of 2 seed phrases. You got to keep secure 2 wallets, and you got to keep the config file for you got to save the config file for your multi-sig setup. But listen, guys, you all have put IKEA furniture together before. How crazy complicated is that? You have sit on the floor during Christmas mornings, during many a Christmas morning, putting together racetracks, Hot Wheel racetracks for your cars. Ladies, you've helped your daughters put together Barbie doll house sets. Shit takes hours to do, man. And the directions are small. You got to get out your freaking glasses to read the little tiny print. You guys have done more complicated things with no problems. So no excuses, but Oliver, it's too complex. Give me a freaking break. No excuses. This is generational wealth here. Man up, woman up. I guess that's it. Any other questions that I have not gotten to, guys, I'll be very glad to address them. Just reading here. I'll be very glad to address them in text form. All right. So listen, once again, I always want to thank you for giving me the most precious thing that you own. It's actually not Bitcoin, but rather it's time. Bitcoin is extraordinarily scarce, but it is not more scarce and not more valuable than your time. You might be able to get Bitcoin back now, maybe not for long, but now you can, but you can never get your time back. The time you spent with me here over the past, I'd say hour. Is it hour or 2 hours? Is it hour? I lose track. But the time that you've spent here with me can never be regained, can never be gotten back. It's spent, it's gone forever. That makes time your most precious commodity. And the fact that you've given it to me is something that I'm flabbergasted by your generosity. So thank you very much. I made a promise a long time ago that anytime I'm given the opportunity to speak in front of a mic, in front of an audience, small or great, on a stage, at a podium, in a live space like this, I try my best to give my heart and soul, to give something of value that you will be able to use or think about or ponder, maybe for the rest of your lives. I hope I've done that here today. And if I haven't, I promise I'm going to work on getting better and better every single time I address you. So enjoy the rest of your day. You know what to do. Get to work, stack harder. You're not stacking hard enough. Ciao for now. My name is Oliver Velez, and I am your 13%er Bitcoiner. Be safe out there, and until next time. Boom!